Good morning, everyone. Welcome to the Vetiva breakfast meeting brought to you by Vetiva Capital in partnership with Frontier Africa Reports. So yesterday, Total Nigeria released their Q2 numbers, and today Luke Ofajebe, who is the oil and gas analyst, will be speaking with us on their earnings performance. Right after that, Simbiat Bada from our Global Equities Desk will be going through some market performances across West Africa. And following that, Omoregi Ogogo will be going through Nigerian fixed income and currencies markets. Of course, we'll be rounding up the presentations with headline updates from across Africa brought to us by our media partners at Frontier Africa Reports. Although we'll have a Q&A segment at the end of the session, at the end of all presentations. If you have any questions during the course of the presentation, please feel free to send them using the Q&A segments or the comment sections on either of the platforms you may be joining us on, that's Zoom or Facebook. Also, please feel free to send us any questions you may have by reaching out to us via email at research@vetiva.com. If you're unable to get your questions across to us today on this session due to time constraints or any other challenge. Finally, I would like everyone to note that this session is being recorded and may be shared with third parties. So to begin today's session, we'll be starting, I'll be handing over to Luke, who will be taking us through Total's Q2 earnings performance. Good morning, Luke.
Good morning, Chima, and good morning. Like Chima said, yesterday, Total Nigeria PLC released its Q2 results. The result was really net profits for the quarter came in at 5 billion. That's a massive improvement from a loss of 400 million naira last and it was also more than our estimate of 3 billion. What really drove the company's performance in Q2? Lubricant sales, which offers a much higher gross to the fuel business. And the growth in lubricant sales driven by increased pricing. And on average, lubricants price over 40% within the last 2 months across the downstream sector. Because of that, we saw gross margin for the company improving to 17% last year. Also, the company was more operationally efficient in the sector, given that operating expense margin dropped to 9% from 8% in Q2 last year. So given the improvements we saw in margins as well as net profits, the company flow improved significantly. So net operating cash inflow came beyond. That's a remarkable improvement from a net of 9 billion in last year. And because of this stellar performance, the company has declared an interim dividend of 4 naira per share. We see the company reverting back to its 2018 dividend. So by the end of the year, we see the company declaring a final dividend of 14 naira. So that should take total dividend for the year to 17 naira per share, dividend yield of about 9%. We are going to revise our Excel today, and before the close of business, we should be able to publish our earnings notes on the company. Updates on Total Nigeria PLC. Thank you.
Thank you very much, Luke. Next, Simbiat Bada will be taking us through some markets across West Africa. Good morning, Simbiat.
Hi, good morning. Good morning, everyone. Like she mentioned, I'll be going over some of the equities performance in some West African markets. Starting at BRVM, the benchmark index closed 66 basis points up yesterday, as we saw gains in the likes of Sikwa Côte d'Ivoire and Safka Côte d'Ivoire. Topping the loser charts, we had Vivo Energy with a price depreciation of about 5.33%, followed by Bolor Transport. Also, the share price of Total Cordova also dropped by 2.94%. Overall, it was a quiet session in the market as activity levels dipped on both sides. Volume traded declined by 57%, while market turnover did by 58%. In today's session, we expect to see some form of increased activity level to close the week, as counters like SICO and SAFCA continue to consolidate on their gains. In the Ghana market, it was a flat close in the equities market as the index remained unchanged. There were no gainers nor losers in the session, even as ETI recorded the highest volume of trade in that session, which was about 50% of the total volume traded. The year-to-date return of the market still remains elevated at 35.13%. Outlook for the close of the week, we expect to see mixed activity level as investors continue to bargain hunt across sectors. Finally, in Nigeria, the all-share index in the Nigerian equities market closed 167 basis points higher as we saw significant gains in the oil and gas space. The oil and gas index gained 311 basis points yesterday. This was largely on the back of significant price appreciation we saw in Total and Owando. Like my colleague in research just mentioned, Total released a fantastic result where we saw significant growth in revenue and profit after tax. Yesterday's trade saw the counter gain 10%, recording a new year-to-date price high of 184 naira 80 kobo. Then for Owando, we saw a press statement that was released on Monday stating it has come to a truce with SEC. The company stated that they've entered into a settlement with the Securities and Exchange Commission regarding the lawsuit and other issues they've been having. Another sector that also lifted the market was the industrial sector. The index gained 4.01% as we saw a 7.83% price appreciation in Dangote Cement. The stock closed the session at a year high price of 284 naira. Our expectation for today, going into today, which is the last trading day of the week, we expect to see market sentiments majorly driven by earnings release and other company-specific information like we saw in Total and Owando. We also anticipate market closing the week in the green, barring any significant loss in the high cap counters. I think that'll be all from my end.
Thank you very much, Simbiat. Next, we'll be moving on to Omarike, and he will be covering the Nigerian fixed income and currencies markets. Good morning, Omarike.
Good morning, Chima. Good morning, everybody. System liquidity declined significantly to open at 29 billion positive yesterday, coming from the 62 billion positive that was recorded on Monday. Despite the decline in system liquidity yesterday, interbank rate losing by over 313 basis points in the absence of any significant funding need in the market yesterday, as OBB and overnight rate closed at 8% and 8.25% respectively. We expect interbank rate to trade higher today ahead of the bi-weekly retail FS auction. Also, there will most likely be a possible CRR debit, and also the bond auction settlement of about 139 billion that is also happening today. All those should increase the funding pressure in the market today. So we expect the market to trade at slightly higher levels compared to where they traded yesterday. The parallel market remained stable yesterday to trade at 503 naira to $1, while the annual window put at 411.57 naira to $1. The highest rate that was recorded yesterday was 412.78 naira to $1, while the closing rate was 411.63 naira to $1. After the gains that were recorded on Thursday, Brent and WTI both lost about 0.1% to open today at 73.72 and $71.83 per barrel respectively. The T-bills market traded on a very calm note yesterday with slightly bearish sentiment observed majorly on the short-dated maturities. We witnessed offers on the mid to long end of the benchmark curve, particularly on the December 2021, February 2022, and the July 2022 papers, while trades were majorly consummated on the CBN Special MTB, the 30th December 2021 and the 14th July 2022, that's the newly issued one-year paper. Overall, average benchmark rate increased by about 3 basis points to close at 6.51%. In the OMO segment, the CBN did not conduct an OMO auction yesterday. So basically, the OMO segment just traded on a very muted note with slightly bullish bias, as we witnessed interest on the mid to long dated maturities, especially on the February and the March papers. Trades were majorly consummated along the mid-tenor papers, that's the 28 December 2021 and the 8 February 2022 maturities, with average benchmark rate declining marginally by 1 basis point to close at 8.42%. The bonds market traded on a quiet note yesterday during the early hours of the trading session, as most players decided to speculate and see how market react to the rate cut at the auction that happened on Monday. We, however, saw activity picked up as the trading session progressed, with slightly bullish sentiment filtering into the market as players who lost their bid at the previous auction came into the market to try to cover their lost bids. The bullish sentiment was also supported by the coupon inflows of about 45 billion that came in, which spurred a buy-side bias in the market. The most sought after maturities yesterday were the 2026, 2035, and the 2050 papers, while trades were majorly consummated on the 2029, 2034, and the 2049 maturities. Overall, average benchmark rate declined by about 6 basis points to close at 12.66%. In the Eurobonds market, it was a buyer's market in the sovereign space, as we witnessed buy-side interest across the 2025, 2027, 2030, 2032, 2038, 2047, and the 2049 maturities, with rate declining by an average of 5 basis points. In the corporate segment, it was another muted trading session with few sell-side pressure witnessed on the Access Bank 2021 Eurobond. For our expectations today, we believe that the bonds market will continue to trade on a bullish note as players continue to try to cover their lost bid from the last primary market auction and the secondary market, while we also expect the TVs market to trade in line with system liquidity today. That will be all for fixed income. Thank you.
Thank you very much, Amaregi. Next up is Boasin Omofai from Frontier Africa Reports, and he will be taking us through some headlines across Africa. Good morning.
Yeah. Good morning. Thank you, everyone. Let's start from South Africa, where the currency, the rand, is closing the week around 14.7 against the US dollar, which is sharply lower than 14.2 last week. As of last night, yesterday evening, the rand was down by 1.17% on the back of the unrest that continues to rock the country. The stock market, however, was much better yesterday, with the JSE climbing about 1.27%. All the key indices, financials, industrials, resources, were all up at the end of the trading day on the JSE exchange. For North Africa, the markets are pretty closed. Egypt has been closed since the start of the week. Today is the start of the weekend. So if anyone is looking at the North African markets, that would be from Sunday, technically speaking. If you look at the East African markets, the British American tobacco had a very impressive results, revenue up about 22% because of very strong domestic sales within the Kenyan market over the past 6 months of the year. Mobile money transactions in Kenya was said to be up 56% in the first 5 months of this year. Then we're looking at the earnings across the region, as well as we're having in Nigeria with Glencore, which is one of the world's leading copper miner or producers, releasing first half numbers by August the 3rd. So we're going to have a raft of these earnings coming through by next month. In Nigeria, the news came in that an arbitration panel or tribunal, if you want to call that, which was set up for the dispute between Nigeria and the Italian energy giant ENI over the OPL 245 is now ready, and both parties can now approach the arbitration panel to make their cases. The International Monetary Fund is warning Ghana about the level of debt to GDP, which is now estimated at 84% by the IMF by the end of this year, if the current borrowings and all that are not retraced in any way. Back in Southern Africa, the real estate investment trusts, those listed REITs who are exposed to the KwaZulu-Natal and the Gauteng region, which were where you will have massive looting and burning of stores and other property, facing a whole lot of pressure right now. The prices are falling on these rates. The fund managers are seriously under pressure as to how they move forward with the level of destruction and stay counting the costs. Insurance, reinsurance will be a whole lot to watch out for. That sums it up this morning for us at Frontier Africa Report. Have a great day and a weekend, everyone. Thank you.
Thank you very much, Bosun, for those updates. For our listeners, we have now come to the Q&A segment of the session. If you have any question for us, for any of the speakers, please use the Q&A segment or the Q&A section or the chat box function, or you can raise your hand if you'd prefer to speak. Also, if you're joining us on Facebook, you can also send in your questions using the comment section. Okay, I see that there's no question for us today. We thank everyone for joining us on this session today. We hope that you found it insightful, and we wish you a productive day ahead and a wonderful weekend ahead as well. Thank you so much for joining. We hope to see you next week, Monday, same time. Good morning.